global markets continue to tumble as the spread of the coronavirus remains primary focus for investors. In South Africa's inflation expected to be at a lower average of 4.4% in 2020. Plus, Tunisia is set to invite the International Monetary Fund in March to discuss a sixth review of its IMF loan program. Thank you for joining us on Business Incorporated. I am Bisi Adebayo. Well, we'll kick off with the numbers coming from the stock markets here in Africa, which were mixed at intraday. Now in Nigeria, the all-share index appears to be reversing yesterday's gains with a 0.67% decline at intraday. In South Africa, the JSE index was up 1.34%. The EGX 30 was also 0.34% positive, while Kenya closed down 0.45% on Wednesday. And in the Middle East, all the major markets we tracked were in the red, except in Dubai, where the index was 0.14% positive at intraday. The Abu Dhabi index was more than 0.5% lower. In Qatar, the market tumbled by more than 1% at intraday, while the Saudi Tadawul also declined 0.58% at about midday Nigerian time. And in Europe, shares were lower this morning as the spread of the coronavirus remained the primary focus for investors. As Chelsea Delany with more news from the markets. Chelsea, so the European markets have been rattled by new data from China showing a surge in the number of new coronavirus cases. And this, of course, comes after stocks reached record highs in recent days on hopes that that outbreak had stabilized. Did investors just get ahead of themselves here?
I think that's exactly the sentiment hitting investors today. 24 hours ago, the DAX was at a record. U.S. stocks also have been at record highs. There's been this real rally behind this idea that the number of new cases, the spread of the coronavirus was really stabilizing. That's all been turned on its head over the past few hours as there's new data out of China showing a huge surge in new cases. China's reporting about 15,000 new confirmed cases in the mainland, and about 250 deaths from the virus as well. This is in part because they've changed the way that they're confirming and counting the number of new cases. So it's not yet clear how comparable this is to the numbers that China has been reporting, but it's certainly reviving these concerns that the virus is going to continue spreading and keep factories from reopening, keep stores from reopening, and keep people from spending, and that's going to of course, have a large impact on economic growth.
So let's talk about the mixed report today from Airbus, showing that the plane maker posted a 1.36 billion euro loss for last year, but reported record deliveries. What are investors making of these numbers?
The reaction has been fairly lukewarm, I'd say. It's not a surprise that Airbus is reporting a loss here. They had come out earlier this year and said that they were going to have to take a 3.6 billion euro charge to settle some bribery and corruption charges. So investors knew that they would report a loss, but some of the details of this report are a bit concerning for investors, and we've seen the stock sell off a little bit here in Europe. It's down about 1.5% in afternoon trading here. One of those concerns is that they're dealing with a lot of production problems. So their big seller, this single-body plane that competes with Boeing's 737 that's been grounded, they're basically 6 months behind on deliveries. So that's one problem, and they're also struggling with a slowdown in the market for wide-body planes. And this is all feeding into lower delivery guidance for 2020 than most analysts had expecting. So they're expecting to deliver about 880 planes this year, and investors had been expecting above 900, and I think that's concerning investors today.
All right, so Germany's BASF says it will build a factory to make components for electric car batteries in Brandenburg, and that's nearby Tesla's planned gigafactory outside Berlin. Why are companies flocking to this area to build electric vehicles?
I think there are a couple of reasons. The first is that this is part of a really big EU initiative to make the European Union a hotspot for electric vehicle production. So over the past several years, the EU has become extremely dependent on Chinese and Asian electric battery manufacturers to provide the batteries and the components used in electric vehicles. Right now, China produces about 70% of those batteries, and the EU wants to produce them themselves, in part because they don't want to be reliant on China for these batteries, but also because the EU is making huge investments and they have very high targets right now for things like emissions reduction. So they really need more electric vehicles, and they really need more electric vehicle batteries. So they've created a lot of subsidies and incentives to get companies to make batteries here in Europe. So that's one reason why we're seeing more companies doing that here. But in this particular region, in Brandenburg, they also have an added incentive to be there because this is a former East German area, and there are a lot of incentives by the German government to locate there because they've traditionally had a weaker economy. But there's also, of course, a benefit of being in a spot like this. When you have BASF and Tesla sort of as neighbors, they can certainly benefit from that relationship as well.
Thanks, Chelsea, for those updates. We'll see you again tomorrow. Let's turn now to the UK to see which earnings reports are moving the market at this time. Our London correspondent, Juliana Olayinka, is ready to tell us. Juliana, it's good to see you again. Now, let's talk about a couple of corporate earnings out there, from British Gas to Airbus. But which of them is a headline grabber on Market Street, and what are the intraday numbers saying?
Good afternoon, Bissy. Well, it's a triple-digit fall for the FTSE at intraday. There are some corporate stories, but the biggest story that's trending right now is the fact that the Chancellor of the Exchequer, Sajid Javid, has resigned from Boris Johnson's cabinet. Huge story here, huge blow to Prime Minister Boris Johnson because he wanted the job. This is the first cabinet reshuffle that Boris Johnson has made since his landslide election victory in December. Number 10 and number 11 being the property that the Chancellor shares, is a very close unit. We have seen some battles over the years, be it George Osborne and David Cameron, Tony Blair and Gordon Brown, but he certainly had the job. There were a couple of people, some big names that got the chop earlier this morning, and Sajid Javid, along with the Home Secretary Priti Patel and Dominic Raab, the Foreign Secretary, were a shoo-in, but there seems to be some disagreement between Dominic Cummings, a big name here in the UK. He's the chief advisor to the Prime Minister, and Sajid Javid. So he's lost his job. As soon as he lost his job, Bissy, the pound did shake. It sent the pound in a bit of a state because, of course, there is supposed to be a budget announced over the next couple of weeks, and we will be heading into a trade relationship talk with the EU. So it's a huge story, and that's definitely dominating British headlines. A quick look at the numbers. The all-share is down 1.36% at intraday. The FTSE 100 is down 1.54%, and the FTSE 250 is down 0.96%. In currencies, the pound is up on the dollar by 0.17%, also up on the euro by 0.20%, and down on the Japanese yen by 0.20%.
All right, Juliana, one of the major stories is the fact that the Financial Conduct Authority has started an investigation into Barclays boss Staisley's characterization of his friendship with convicted sex offender Jeffrey Epstein. But do you think that this might have some implications on the bank?
Well, it's not a great story. Nobody wants to be linked with the disgraced financier Jeffrey Epstein, no less than Barclays. Again, this is a story that's slightly creeping into business news here in the UK. And really, it's the Financial Conduct Authority finding out just what the nature of the relationship between Jeff Staley and Jeffrey Epstein occurred. This was during his time as the boss at JP Morgan. Now, Staley has always said that once he started the job at Barclays in 2015, he ceased this relationship, but they're looking much further into this. Barclays at the moment appear to be standing by him, but, you know, Jeffrey Epstein had a lot of friends, no less than Donald Trump, the US president, former US President Bill Clinton, and, of course, the royal Prince Andrew. So, yes, this is a story that's likely to start leaking out more as the time goes on. But Barclays at the moment, yes, standing by their chief exec.
All right, just before you go, Juliana, more than 50 retailers, including supermarkets and department stores, have written a letter calling for business rates reform. What's the story behind this?
Well, this is a letter that they actually wrote to the former Chancellor of the Exchequer, Sajid Javid, this morning. It will go to his successor, Rishi Sunak. He's a name that will be dominating over the next couple of weeks. But look, you know, we've discussed it on this show for several months now. The retail high street is dying. A lot of big names and, of course, the smaller names are struggling to stay afloat. And they're asking for the government's assistance. One of the ways that they believe the government can assist them is to reduce business rates, which costs retail about £500 million per year. And they're saying that it's completely unaffordable, particularly for some small stores up in the north of the country. They're given millions and millions of pounds a year to London, and they think that money could be better spent elsewhere. At the moment in the UK, retail employs about 3 million people, a lot of women, a lot of part-time women who are working as mothers, as single mothers, and it does a lot to boost the economy. But of course, a lot of people are going online now and are shopping more conveniently. And without the reduction of these business rates, without government intervention, the high street will look completely different in a couple of years. So they're asking the Chancellor of the Exchequer to relook at these business rates, Bissy.
Well, we'll see how all these play out in the coming days. Many thanks, Juliana, and we'll do this again tomorrow.
Thank you.
In Asia, major stocks declined today as investors weighed a spike in the number of new coronavirus cases reported in China's Hubei province due to a tweak in methodology. Mainland China's stocks reversed earlier gains and ended their trading day lower, with the Shanghai Composite down 0.71% to about 2,906.07, while the Shenzhen Composite fell 0.76% to around 1,771.61. Hong Kong's Hang Seng Index was 0.29% down, as at its final hour of trading in Japan, the Nikkei 225 fell 0.14%, closing at 23,827.73, while the Topix Index finished its trading day 0.34% down at 1,713.08. Meanwhile, South Korea's Kospi slipped 0.24%, finishing at 2,232.96. And in Australia, the stocks closed positive, with the S&P ASX 200 up 0.21%. And in the U.S., stock index futures pointed to a lower open on Wall Street today as investors, of course, continue to worry about the spread of the coronavirus and, of course, looking ahead to a slew of earnings. Earlier on, the Dow futures indicated the average would drop nearly 200 points at the open, while futures on the S&P 500 and Nasdaq were also lower. Corporate earnings still remain in focus for investors, with Airbus, Kraft, Heinz, Alibaba, Credit Suisse, Barclays, Nestle, and PepsiCo all releasing earnings before the bell. Companies reporting after the bell also include Expedia and Datadog. Meanwhile, investors, of course, are still monitoring news on the coronavirus outbreak, with China's National Health Commission delaying the daily tally of new cases of the virus and the death toll for a second day running. Well, let's take a breather from those numbers in the markets now to South Africa, where inflation is expected to be at a lower average of 4.4% in 2020. And that, of course, opens the door for the central bank to cut interest rates again during the year. This is 0.4% lower than previous forecast and less than 4.7% predicted for next year. Analysts say food inflation is also likely to remain tepid despite forecasts below average rainfall. Our commodities focus comes up just after the break. Please stay with us.